Welcome back to FT Markets. Mario Draghi, ECB president, has announced today details of his plan to buy private sector assets in order to revive lending in the eurozone and stave off the risk of deflation in the single currency area. Discussing this with me today is Ralph Atkins, capital markets editor at the Financial Times. So Ralph, Mario Draghi has unveiled his program of private sector asset purchases. What's in it?
Well, there's two main components to this program. Firstly, the buying asset-backed securities. The other one is covered bonds. They're both types of products that bundle up loans and allow banks to get these loans off their balance sheets, freeing up credit. The idea is to generate more borrowing to go into the economy, revive the real economy, get inflation up higher again.
What have we learned today? Because this program was first launched last month.
Well, we know it's going to start. They're going to start this month. We've had some description by Draghi about some of the details. For instance, that they're going to accept Greek and Cypriot asset-backed securities, even though they're rated as junk bonds by the ratings agencies, which means that the credit can flow to those countries as well. Draghi's given some idea about his objectives. I mean, there was speculation that he might say how much they would buy. He hasn't said how much they would buy. He said that they want to increase the size of their balance sheet to where it was at the beginning of 2012 without being too specific about exactly what that means.
Now that's an important point, as we can see from the first chart which you brought with you, because
the balance sheet's been shrinking quite a lot, absolutely.
And this is very different from what other central banks are doing.
The Fed has been continuing its quantitative easing, large-scale government bond purchases, and their balance sheet's been expanding. The eurozone in a far worse economic situation, inflation in danger of falling into deflation territory, and the ECB's balance sheet has been shrinking. But what was interesting today was that although Draghi said they aim to steer their balance sheet back to the size it was at the beginning of 2012. You can see up by the 3 trillion level where it was roughly. He said, that's not the way to judge my program. You need to judge me by what happens to inflation.
Now, and in order to judge him, we need to know what's happening to inflation. But obviously, a key component of that is what's happening to the euro, which is your second chart.
Yes, people in the market say this is Draghi's secret weapon because we've plotted the trade-weighted index here. But you can still see there's quite a steep fall recently. Against the dollar, it's been more pronounced as well. The dollar's been appreciating. That means imports are more expensive, and exports are easier to sell overseas. So both should boost the eurozone economy. Interestingly, actually, I think there's a little market disappointment after the press conference today. The euro has actually gone back up a bit today.
Of course, a big help to the ECB may come from the Federal Reserve.
Absolutely. If the Fed moves to start tightening interest rates, lifting interest rates earlier than markets expect, not until well into next year, then we could see the dollar appreciating considerably more, the euro going down, and then Draghi would be under less pressure at least.
Thank you very much for being with us today, Ralph. So Mario Draghi is doing what he can to rescue the eurozone from stagnation, but it may be Janet Yellen helping him in his very difficult task.